One bull market rally has already started and another one's about to begin. All that and more on today's Sunday Night Charts. I'm your host, Steve Van Metre. Thanks for joining me. Moving averages is the colors on your screen. The 21 day is in red, 50 is green, 100 days in blue, 200 days in tan. Price versus momentum. Price is general direction. Prices are red. Momentum is the rate of change. A bullish indicator for both is positive and bearish indicator for both is negative. Momentum often, but not always, leads price. Technical analysis attempts to determine where buyers and sellers are at. Resistance is a level buyers can't break, and support is a level sellers can't break, or resistance is where sellers are at and support is where buyers are at. Technical analysis does not predict prices. It can be used to determine the risk of a trade, help with timing of trade, and provide direction to the path of least resistance. Charting offers possibilities, not probabilities, and not certainties. Let's start out with the S&P 500. Things are starting to shift for the equity market in a direction people are not expecting. What do we see here? A small change against the 21-day moving average. Momentum now turning lower, turning higher from bearish to bullish. And looking now below the 9, 21, and 50-day moving averages. These are leading indicators of a potential downturn. Let's take a look at what's going on with the SPY. We've got the volume profiles now. You're seeing prices held. This volume support line where you see this dark red line is where most of the trades over the last 6 months have occurred. And this was acting now as a level of support. And just last week, in a matter of a few days, broke right through that, giving us the indicator that everyone above here is really selling into this strength. So that if this supply zone between these two purple lines break, then that means the path of least resistance is back down into this 390 range, low 390s, high 380 range. So you see a supply zone. This is where sellers are at up here. This is where buyers are at down here. We're getting a pretty good signal of that. Let's see if that continues on to the Qs. And looking at the tech stocks, everyone thinks lower interest rates is bullish for tech. Oddly enough, higher interest rates are always also bullish for tech, meaning that regardless of interest rate direction, it's bullish for tech. That doesn't make a lot of sense, but we do see momentum on the 21-day moving average turn bullish. It's sitting above all its major moving averages. Momentum signals are all green. Let's take a look at the NASDAQ and see if there's any sign of risk there. It's sitting right below all-time highs. So very clearly we know where buyers are at between these two purple lines up here. Sellers are been up here. Buyers down here. Will the buyers pull through the sellers? The sellers are trying to hang on there. Again, there's this odd belief that regardless of interest rate direction, tech stocks can only go up. Maybe a lagging indicator, because one thing we do need to look at is small caps. Remember, the small caps lead the big caps, the large caps. That's why it's so important to pay attention to things like the Russell 2000, IWM. No change in price or momentum, but now dipping below all the major moving averages. 9 through 100, no change in momentum yet, but that probably is soon to come. Let's take a look at the Russell 2000 here. Where's IWM? Down here. And remember, we were looking at this volume support line in red and trying to establish is this support or resistance. And it's very clear above that, those two purple lines, that is resistance. This is where sellers are at up here in this, say, 230 range, and buyers down here in the 212, 215 range. So right now we have to look at this volume support line as the zone where sellers have been. Have to look at it that way. This direction, the path of least resistance now points to IWM heading down into support, where, of course, buyers will hope to buy and hold it there to break that out. If it doesn't, then you can put the NASDAQ and S&P 500 on notice that things are going to get worse for them. Let's take a look at the next one. How about the energy sector? Momentum on the 50-day moving average now turning up into bullish, remains below the 9 and 21 days moving average. Is that a big deal? Well, not really. Let's take a look at XLE, and what do we see? The 50-day moving average is, kind of a little disjointed move, but it's trending up. It's coming down to its volume support. If it holds here, which it's been holding, you can see buyers have been very clear at this level that this could just be a pullback into the 50-day moving average, into the volume support line, and support energy prices heading higher. So there's no danger here. We know sellers have been right around this $56 range. And why is that? Well, we have to go back out to the 10-year weekly chart to see. Well, that price at, say, $55 in XLE was one support. And when it breaks through support, becomes resistance. People that previously have positions that had bought at 55, what is this telling you? It means prices are back there and they are eager to sell. They believe prices are headed lower, so they are selling here. Will buyers overcome that? That remains the question. And this volume support line at the moment says, yeah, that's okay. There's no danger there, at least as of now. Now, financial stocks are starting to take a change. Price on the 21-day moving average headed lower. Momentum on the 50-day moving average headed lower. But momentum on the 21-day saying, maybe not, heading a little higher. But there's a little danger here because financial stocks trade opposite of bonds. And we talked about last couple weeks, bonds being on this verge of breaking out. We're going to look at that breakout again, and there's something else following, so stay tuned for that. Above the 921 or below the 921 and 50-day moving averages, early signal when you break through the 50-day, that's not a good sign. 1 month momentum has now broken, meaning price over the last 1 month is headed down. Let's take a look at the financial sector and see what we've got here. A very clear sign of where sellers have been in financial stocks, moving down in, just heading into the 100-day moving average. Support is sitting here right at this 34.88 line, and that is most likely to touch somewhere Monday during trading. You can see there's quite a bit of volume on this move lower, and the big support line for XLF is well below that at 31. So if price does not hold, and this is not a positive move. You're seeing this break down. It tells you that if it doesn't hold support here at the 100-day moving average, it's got destination with the 200-day moving average, and that is super bond bullish. Of course, we're going to look at bonds breaking out. Hopefully you jumped in on that because there's another one following it. Let's take a look at industrials. No change in price momentum, but dipping below the 921 and 50-day moving average. 1 month momentum broke. Why do industrials matter? Well, if you're a fan of the Dow theory, then industrial stocks are leading the broad equity market lower. And what do you see? This volume support line at 103. What is that telling you? Is sellers have been up here. The next path for XLI is going to be right around its 100-day moving average. This is not a chart of confidence when you see this kind of move. It tells you there's definitely some liquidations going on there. How about into the utility sector? 21-day moving average price momentum now turning back positive, even though it remains below its 50-day moving average and 21 and 9. Let's take a look and see what's going on with the utility sector here. And what do we have? A clear picture now. Remember, this was a bull flag. This is what everyone said. You have your flagpole, bull flag, prices headed higher, it started to, and then hard. I mean, talking about a hard rejection. Now you're looking at volume support at 62.70, support right above that 62 and 90s. This is telling you price is most likely coming back down here. There's not a lot of volume trading in here, but you can see how the volume starts building up. That's where your support is. That's where your buyers have been. At this point, you can tell you this wasn't a bull flag. It was a bull trap. This is where sellers have been, and sellers are probably still there. So hang tight on that. Look to that head lower. How about gold mining stocks? This is real interesting because one thing in my macro thesis I've been looking at is gold miners to head lower and bonds to head higher. We're seeing that breakout in bonds. We're seeing that move now in gold. How about the other security we're looking at? We'll wait till we get to that. So GDX, look at this. Price and momentum both go bearish on the 21-day moving average, bearish on the 50-day moving average under momentum. Below 9, 21, 50, and 100-day moving averages. And things just unwound quickly for this. 1 month momentum went red, negative and falling. 9 month momentum is now negative and falling. Putting notice, the 3, 6, and 12, not long. Probably the 3 will come next. Let's take a look at GDX because this was supposed to be the rally. Let's move out. That everyone was talking about. This was going to be it. This is it. This large topping pattern, let's even zoom further, that I said is a topping pattern in here. No, people said that was invalidated. You got a double bottom here, double bottom here. This was it, buy the rally, and then just massive unloading here. And let's take a look. The 6-month volume profile just snapped in overnight trading, gapped below that, and just continue down. Support for GDX right now is this dotted line at 33.50, and it seems to be making a nosedive there. This is what I was looking at. This is a major breakdown. The likely retest, if it fails there, you've got a retest at 30.64 and a failure there. Well, now you're down to the this thing's starting to come undone. So if you're in GDX, keep an eye on this chart. It's not one that you want to see. It broke the 50-day moving average, didn't hold that for even a second, just blasted through there, blasted that volume support line, and overnight trading is now on a destination lower. So that is not good. But we'll take a look at gold here shortly and see emerging markets. Now, if you're bearish on GDX, well, then you're bearish on EEM. They tend to move together. Price on the 100-day moving average turned bearish. No other changes there, but it's below all the moving average below 100. Let's take a look at EEM, because that is telling you or GDX is telling you that it should be headed lower. And look at that. You have the sell zone up here between 50, say 55, in the 55, almost $56 range. Volume support. Trying to hold now at 54.23. We know sellers have been up here. It's very clear. This is where sellers are at. Break here, which GDX is telling you. If you don't believe me, put a chart up against GDX, EEM. You'll see it telling you that if GDX continues to head lower, EEM breaks, that party is over. And for EEM, well, there's not a lot of volume in here to hold that. Meaning that if EEM gets below, say, the $52 range, the next move is down into the mid 40s. And there's not a lot of volume to hold. A little bit here at 50, not much at all. So keep an eye on GDX to lead EEM lower. And let's take a look at high yield bonds. Not showing any major problems in the equity market. It tends to show up here. 21-day moving average momentum went bullish, sitting below the 9-day moving average, which is almost meaningless at this point. And let's take a look. And it's been sitting above this volume profile line for a long time now. Going back to November of last year, it's been holding this line very strongly. If high yield bonds break down, now there's problems. That's where the issue is at. You can see there's not a lot of trading volume below here. Support is sitting around 80 in the $86 range, and then below that here in the $84 range. Not a lot of volume, but clearly a lot of sellers up here because buyers keep trying and they keep running into a massive amount of selling in the high yield bond space. Take a look at TLT, of course, Bond King's favorite. No change in price momentum. But look at that, above all the moving average, 9, 21, 50, 100. 1 and 3 month momentum turned green. So it's going to be a little while for the 6, 9, 12, but they are negative and rising. That is a positive thing. So what do these momentum signals mean now that we're looking at TLT? If we were to zoom in on the 90-day chart, which isn't actually 90 days, it goes back a little bit further. What it's telling us in the 3 month is it broke out of this bottom. So if we go back, say 3 months to around 319, which is right in here, it tells us price over a 3-month period is positive and breaking higher. But let's look at this chart because we're talking about this Momentum Timer Pro, my daily report, currently in open beta, link in the description below, identified a breakout here. I think about almost 20 days ago, it started signaling that this was going to break out. So if you want to see my price and momentum data on a daily basis, the open beta free, again, link in the description below. First report for you will be Monday morning. Now, this is really interesting because this is threatening to unwind the equity market. And let's take a look at TLT because it completed the Wyckoff bottom we looked at, broke through the moving averages, and jumped up. To see this little zone here of volume, that's where it's telling you it came to a little bit of stop at 145. Now, you'll notice there isn't much volume here between 145 and 152, which suggests it will move very quickly up there. And I want to show you some evidence of this to help you understand. When you see supply zones, and there is a supply zone, a very weak one here at 145, and the other one's up here at 152. So you notice how when price gets to this 145 range, it shoots up pretty quick to 152. See how it moved back down, and then it moved back up, and then here it moved down very quickly. What it means is there isn't much resistance. There's not a lot of shares traded, so price will move quickly between this, meaning that the next level of resistance for TLT is up here at 151. So you can see this rally is building. You can see there's major volume support sitting at 139. This is a clean signal. You can see in the last 6 months, there's very little volume because most of these moves were in the overnight. Rally is still here. This continues to go, unwinds the equity market, but it's going to bring another security with it. So hang tight. We're almost to the next breakout. So you're seeing TLT breaking out. The 100-day move will not turn bearish or bullish quite yet for a while. 6 and 9, 12 will stay in this position for a while. This is what you look for. Remember, this was all red not long ago. We saw this with GDX. Now you're seeing it with TLT. Let's take a look at gold. And this is pretty ugly. 21-day bearish price momentum. 50-day bearish on momentum. 100-day flipping bearish on price. Below the 9, 21, 50, and 100-day moving average. 1, 6, and 9-month momentum turning negative. And that is ugly. That is telling you, warning, warning, warning. If you're in this, it's time to rethink. How do you know the 6 month? Go back 6 months. You can see that broke, and you can see some of these other, time periods have failed. And that's why, if you're not really good at technical analysis, these, 1, 3, 6, 9, and 12 month are just forms of technical analysis just based on momentum. So you don't have to draw lines on charts if you don't like, but it's telling you broke the 6 month trend. That is not what you want to see in a bull move. So let's take a look at gold. People are really bullish on this. And I said, look, in order to be bullish, price had to come back down and had to hold the 50-day or at 1820. You heard me say that. It failed. And you can see, look at all this volume support over the last year. Sellers were right here at 1900. You already knew this. They were there. If you looked at the volume profile, sellers said, yes, we're here. There apparently weren't many buyers, as gold now is got a destination with 1750. Fails there. Now it's down into 1687. Fails there, then we're now validating this topping pattern, and now you've got the next call to gold down to 1500. Yikes. But you saw the volume profiles telling you. You can see it. This is where sellers are at. They're there. Now is there money from the buyers to hold that up? That is a question. Silver, interesting. Let's take a look at silver. As we know, the Wall Street silver team attempts to break silver out. 21-day price went bearish. No other changes there. Now below the moving average, 9, 21, 50, 100. One momentum turned red, negative and falling. What is going on with silver? Because we've been trying to question let's go to the 1-year chart. Is all this supply zone up here, is this really a sell zone? Because we had this volume support and it got above it and it said, did this flip? And I said, it's too soon to call. I said, remember, if you're in this position, this is not a position to add. This is a position to maybe get out of or hold if you're in that position, because you got to confirm what this volume support is telling you. And what did it tell you? This is a sell zone. It is still a sell zone, and there are sellers here suggesting that the next direction for silver is down here to $25, where's price of support is at. And this is a consolidation pattern. Usually consolidation patterns follow the trend, but if they fail, man, silver's got a long ways down to go. So keep an eye on silver to head lower to 25. And now let's get into, of course, the last one is the one that's got the next potential breakout. Of course, you don't want to miss this. The dollar price, 21-day moving average has flipped to bullish. 50-day moving average momentum flipped bullish. Price on the 100-day moving average flipped bullish. Now above 9, 21, 50, and 100. Remember, this was all red. You want to know how to read this show, read these indicators. When they're all red, that's when you need to start keeping an eye on it and say, hey, there's potentially a breakout at some point, and I want to get in on that bottoming pattern. 1 month and 6 month momentum now positive. 3, 9, 12, all negative and rising. Again, it's just telling you there's a breakout coming in the dollar. First, let's look at DXY. Very clear what's going on here. Let's zoom out over the 2-year. Double bottom at about 89, 90 right in here. It's moving up into the 92 range. Now let's do some education on what's coming next. and we probably have to go to the 10-year weekly. So what happens above 94? This is what I'm looking at for a breakout. The dollar prince himself has confirmed that. He sent me a note, said, yes, I agree. And a break over 94, you see how quickly price moves up to the 103? And you can see it's moving through these supply zones very quickly. And then 103 back down. Break over 94, destination 103. Comes all the way back down. Break 94, the next destination is 103. Break 103, welcome to the next financial crisis. And here you can see that this thing has got some legs. And let's take a look at UUP. So you didn't miss out on this at all, but you can see the volume support of the last 6 months telling you this is a bottom. So there you have some confirmation. Look at the volume profile. The next spot for volume profile on UUP is at 25.26. And so let's see if we can find that on DXY, where that little cluster of, yep, is right at 94. So there you go. The question now is, has there been accumulation all this time? And 94 is over the last year where buyers are at, or as sellers reject that. If it holds that, it's good for all of you who are long the equity market. If it doesn't, and this is accumulation of a bottom, watch out. Bad things come when dollar breaks out. Anyways, thanks for watching. We'll be back on Monday for the macro show. Appreciate you being fans. I'm Steve Van Metre. Bye now. The content of this video is provided as educational information only. Is not intended to provide investment or other advice. This material is not to be construed as a recognition or solicitation of buyer selling security, financial instrument, or participate in any particular trading strategy. This video was prepared by Steven Van Metre, personal capacity. Opinions expressed in this video that do not reflect the view of Atlas Financial Advice Inc. or Steven Van Metre Financial.